Rivian just reported their latest earnings, and yes, you could have guessed it, they're still losing quite a lot of money, they're running out of time, and they're running out of money. Now, before the market opens, there was a news article that came out with regards to, again, Apple and a potential Apple car. In this case, maybe a partnership with Rivian. This, of course, was a small positive for Rivian stock, but in the end, stock turned red anyways. Now, what could this be? I don't know. Could be software, could be maybe an investment. We don't know. I think we're going to see Apple and EVs, Apple and smart cars rumors for a long, long time. Now, with regards to Rivian, I think they hope that somebody comes and buys them out at this point. I mean, if you look at Apple, share buybacks of $110 billion, that's what, 11, 12 times Rivian's market cap? So, I mean, maybe it's worth it, maybe not. Remains to be seen. Just because a big company like Apple buys Rivian out, one, it's great for shareholders, but it doesn't mean that they can turn it around. It just means that they will have more and more money to burn in the short term. I mean, look at Lucid, right? The Saudis are backing Lucid. That doesn't mean that suddenly they're making money. No, it just means that they have a longer runway. Maybe that's what Rivian needs right now. More time, because they are running out of cash. So if they somehow, one, of course, they can always raise money, dilute shareholders, or somebody buys them out, someone with a lot of cash, and then, of course, they will have time. Because I do think that there is demand for cars like Rivian. They look good, there's nice sentiment, there is a community environment, good advertising, etc., etc. But financially speaking, it's not going great. So let's have a look at that right now. If you enjoy these type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So right now, at the time of making this video, the stock is just under $10. It's down 2.63%, has a market cap of around $10 billion. EV to sales ratio in the next 12 months of around 1.1, 1.2 times. Now, if you look at what the analysts are expecting, they're expecting sales growth of around 9.5% year over year for fiscal year 2024, but a big reacceleration in the next two fiscal years. 57.5% year over year growth, and then close to 70% year over year growth in fiscal year 2026. And just an FYI for those that are interested, right now the current average analyst price target sits at $16.38, meaning over 60% upside from the price we're at today. And yes, of course, when the stock price was higher, the price target was higher as well, even though the business did not really improve more before than today. Just so we're clear. Now, for the quarter, they produced 13,980 vehicles and delivered 13,588 vehicles. The R1S was the fourth best-selling electric vehicle in the United States during the first quarter of 2024, the best-selling electric vehicle in the US above $70,000, and the best-selling large luxury SUV in California across both electric and combustion engine vehicles. Amazon and Rivian remain focused on bringing 100,000 Rivian electric delivery vans to the road, which will help save Amazon millions of metric tons of carbon per year. Rivian is also excited to help the broader commercial vehicle market to reduce emissions in the transition to electric vehicles with our state-of-the-art vehicle. I think this part of the business does get overlooked because I do think that there is quite a big market for electric delivery vans. With regards to operational efficiency, our one line here, the rate is expected to improve by approximately 30%. They expect greater plant efficiency will result in lower conversion costs per vehicle during the second half of 2024. With regards to charging, as for the first quarter of 2024, they had over 470 Rivian Adventure Network chargers across 77 locations. To date, in 2024, Rivian Adventure Network chargers have demonstrated an uptime of over 98%. That's of course great, and yes, they have enabled access to over 15,000 Tesla superchargers to Rivian owners. Then with regards to outlook, they remain focused on ramping production coming out of their plant, retooling, upgrade, and R1 technology integration. Thus far, consistent with their expectation, they have hit all major milestones associated with the planned retooling upgrade, and they are reaffirming their 2024 annual guidance provided during the fourth quarter and fiscal year 2023 earnings call of 57,000 total units of production and a loss of $2.7 billion in adjusted EBITDA. Now, due to moving the start of R2 production to Normal, Illinois, they expect to be able to significantly reduce the capex required to launch R2. Because of this, they are lowering their capex guidance to $1.2 billion, a reduction of around $550 million. They also expect savings from moving the R2 launch to Normal to impact 2025 and 2026. As you will see, at the current losses, they only have around 4 to 5 quarters left. So without a raise, without major improvements, they will never reach 2026. And a bit more on that, more specifically here with regards to gross profit losses. So during April 2024, they shut down their Normal factory to introduce new technologies into the R1 platform and retool the R1 production line. They expect this upgrade to further reduce the material and conversion cost of their vehicles as they exit 2024. However, in the near term, they expect the planned retooling upgrade to negatively impact their vehicle production and cost of revenues as a result of the direct downtime and less efficient absorption of labor, overhead, and depreciation associated with lower volume. But as we've seen before, they still expect to reach their goal of 57,000. So I guess the second half of the year is really where you're going to see the huge ramp up, or semi-huge ramp up, should I say. And so if we look at the numbers right now, so revenue $1.204 billion, gross profit, a loss here $527 million, gross margin negative 44%, gross profit per unit delivered, a loss here of $38,784. Now, if you take the net loss attributable to common stockholders, $1.44 billion, and you take the deliveries, which are 13,588, then they're losing around 106,000 per vehicle delivered. That's not great at all. Now, another thing, revenue. Great, right? Great growth year over year from $661 million to now $1.2 billion. That's great. But net loss is worse today than before. You're delivering more, you're generating more revenue, but your net loss is worse. It's like the inverse economies of scale. And so right now, cash equivalents, short-term investments, and restricted cash, $7.85 billion. And yes, if they continue to lose around $1.4, $1.3, $1.5, even $1.2 billion each and every quarter, the runway is not that long anymore. Oh, and by the way, in order for this to improve, of course, we know the production number for 2024 is 57,000. We know that production right now for this quarter was just under 14,000. So there's going to be just a tiny improvement throughout the next 3 quarters for them to reach that 57,000. And a tiny improvement, in my opinion, in production and probably deliveries as well, is not really going to move the needle that much unless they know they're going to beat that number and surprise the market, then that's fine. But so far, this quarter, of course, in April, we know downtime, retooling, etc., fine. But right now, production under 14,000, the goal is still 57,000. So I'm really curious how they plan on, they still remain confident in their path to achieving modest gross profit in the fourth quarter of this year. I can't wait for the fourth quarter because, to improve that fast with those numbers, it's going to be quite interesting. And so right now, looking at the stock, this is on the weekly or under $10 yet again. So probably tomorrow that candle will turn red, might have a small rebound here over the 20-day moving average, which sits at $9.57. The 50-day one, which seems like a rejection right now, $10.83, and the 200-day one sits at $15.89. And so overall, to conclude, I've been saying the same thing for quite a while now with regards to Rivian. It's a bet. It's either they survive and succeed, and you're going to be up quite a lot on your investment, or they don't survive and your investment goes down the drain. Can be acquired, can be them raising money, diluting shareholders, but if that means that the company survives and actually reaches the stage of them scaling up in a profitable way, then I think dilution makes sense. That's about it. Like I said, big fan of the car, big fan of the company, but financially speaking, not a fan at all. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.